so far in this class is, again, remember we're breaking down certain items in the parent equation. Last 2 weeks we looked at inventory, a very specific asset, and then the cost of goods sold. And really we looked at everything over here as well as inventory. So that was the last 2 weeks. We looked at sales revenue, sales discounts, returns, cost of goods sold, and then there isn't much more to break down in the expenses except adding a few. We're going to keep adding a couple expenses about every week into that category, into the expenses, but there's nothing really particular to break down with expenses. What's going to look like for the rest of the semester is this week, we're in week 9 of the semester, so we're starting the back half. We're going to look at the current assets. And down next week, we're going to go into the more long-term assets, specifically the property, plant, and equipment. And then we'll have our next test in week 11, covering week 8, 9, 10, 11. And then we're going to jump over to the liability side. And we're going to spend the next 2 weeks here. We're going to spend again, week 11 is the exam. Week 12 and 13 will be in the liability type area, also looking at time value of money. Week 14 will be owner's equity. And then week 15 will be our last financial statement. It's called the statement of cash flows. Kind of wraps everything up. A good final ending to the semester. So you kind of see where we're headed for the rest of the semester. And again, we'll add a few more expenses as we go. Today will be no different. We'll add a couple expenses. So today we're going to look at the current asset side. Primarily looking at the receivables and cash. And the first thing, well, anything you want to ask before we get started about kind of where we're heading the rest of the semester? For those in my in the Muncie class who are seeing this, because I'm having recorded today, I will be in Indy tomorrow for the accounting chairs. All have a meeting in Indianapolis tomorrow. So that's where I will be tomorrow all day. And then for the Muncie class, I'll be back Thursday to wrap up our session on current assets. But today we're going to talk about the 3 primary things I have on the board: petty cash, and then looking at a change fund, and then looking at interest receivables. Go ahead, Joe.
Is there a way to get the answers, like the formulas for the Wiley Plus homework that was due? Because when I did the FIFO and LIFO, it seemed like I couldn't figure out the calculation. It was like I used the ending inventory, and it came out to like $2.07 at that ending inventory instead of $2.13.
Send me the exact problem on email, and I'll go in and look at it.
Okay.
And then if that's how it is for everybody, that if it was maybe do you think it's messed up or something?
Well, I used the ending inventory for LIFO, and I had no issues, just
Yeah.
like you showed. And then when I put it in for LIFO, I tried using the beginning inventory, which was $2.13. But when I divided that by the amount that it gave me for the answer, it came out to $2.07 instead of $2.13.
Okay, I'll have to look at yours in particular and see. And if you were only off by like $1 or $2, then I'll check everybody else's too. Look at that individual problem. But yeah, anytime you have anything like that, send it to me on email. Say, please look at number 6-4. What's going on here? Why am I off or something? Yeah, definitely do that so I can have it prepared ahead of time and discuss it possibly in class. Okay, the 2 things, first couple things that I wanted you to know about the petty cash. I'll put this down for a minute. Just got to be careful I don't write on it because I'm used to writing on it. Petty cash, if you've ever been part of an office of a business, almost every office has some kind of a petty cash account. Basically, if the business needs to make a quick payment and it's just kind of silly to write a check, or maybe the person who needs to sign the check isn't there, the owner or the office manager, you got to be able to make some kind of small payments right away. Now, bigger payments, yeah, they need to have some approvals and they may need to wait. And then with petty cash, you have probably a rule in your office where it says if it gets down to $15, we need to go ahead and replenish it, or at least do it maybe every month. Go in and update it, and you'll see what I mean when I say update it. That's when we do a journal entry, when we update our petty cash. And that kind of brings me here to that second point. When you're dealing with petty cash, the first thing about doing journal entries to petty cash, you only ever adjust petty cash, the actual T account that we're going to put on the board in a minute, 2 times. On 2 different occasions may you actually have a journal entry called petty cash. Otherwise, you leave the account alone. If you need to open up the account because you don't have one yet, and you say, yeah, we need to make a petty cash. All right, yeah, that's obvious. We need to make a journal entry to start a petty cash account. You'll see this better when I pull this shade up, but if cash is the first one, cash is always the first. Say it's like account 100. Right below that, even before we have accounts receivable, account 101 would be our petty cash. It's still cash. It's just that this cash is usually our checking account, what's in the bank. This account would be what's in the office. We want to keep them, we want to know what the balance is in both. And you don't want to just have one account representing both though either, because the bank will say you have $2,100, but really you only have $2,200 because of this extra 100 here in petty cash. So now you might think, all right, at the end of the month, well, I probably should have a journal entry for petty cash. But that doesn't fit my 2 criteria. Nowhere on my 2 criteria does it say at the end of the month or when I replenish, I'm going to make a journal entry of petty cash. No, what we do at the end of the month or when we replenish, we go down to the bank, withdraw some money, and when we go to the bank and we withdraw the money, I need to credit my bank account. And the debit is to whatever I spent that money on. Maybe I spent it on postage stamps. Or delivery fees, whatever I needed to spend that small amount of money on, I need to show that as an expense in my equation, the expenses. My petty cash would still say $100 or whatever I originally had in it. I could have put this one, maybe I should have put this little bullet point up here as more of an explanation of the account. Generally, when you have a petty cash, the office manager or somebody will be in charge of it, and then there would be a limit. Anything over $20, depending on the office style, anything over $40 maybe, must be written in a check. Anything less than that can definitely come out of the petty cash. And then you definitely need to keep track of what you spend money on. You can't just take some money out, say $16.58, and pay something. You have to keep track of it. And then you'll have this little notebook or something. It's not a journal, but you'll keep track on a little notebook, a little something, scrap piece of paper, it doesn't matter, but you keep track that I spent initial at maybe $16.58 on postage. And then you just you note that. And then at the end of the month, when I go back and replenish the fund, that's when I'll journalize that says postage expense, $16.58. So you only journal with this petty cash account, and you only journal when it's time to replenish it, not every single time. You don't go in and make a journal just because you paid $16.58. You do that at the end of the month, or when it's time to replenish, if that's it, maybe every 2 weeks.
You wouldn't happen to have a copy of that on Blackboard, would you?
No, but I can send it. These are just my notes. Instead of me writing it out, it was just easier for this one because the notes were in a pretty good format. Sometimes my notes are more messy, but these notes I made in a decent format. So I just this is all the notes we're gonna do an example here. We'll have a couple more notes in a minute, but so just a basic understanding of petty cash. You don't need to write word for word what I have, just so you get a basic idea of what petty cash is. And we're going to do an example, the one I have in your note that you printed off in a minute. But I want you to do that one on your own. So I'm going to make one up and put it on the board that we're going to do together to show you how to do it. And then I'm going to have you, we'll get out number, I think it's 30. 30 is page 2. Page 2 of number 30. We'll look at that in just a minute. Let's say on July 1, we open up our very first petty cash. We've never had a petty cash in our business. We decide, yeah, we probably need to. And we put in $100 into our petty cash fund. And then through the month of July, I have my little scrap piece of paper. And let's say I spent money. Give me something that, let's say in my rule, I can't spend over $25. Otherwise, I've got to write a check. So give me something, just yell it out here, something that I would have spent money on and how much I spent on what it was, and what's something that if you're in an office setting, you might need to go get money for and pay it real quick.
Like supplies, office paper, or something like that.
Okay. Supplies, she's saying maybe office paper, you need to run down and buy some. And how much did that cost us?
What, $35 maybe, 30? Or should it be?
Let's make it less than 50. Let's make it less than 25. Let's call it 15.
Okay.
What else are we going to go buy that we need some quick money for? Just we forgot to buy this when we. Stamps, okay.
Yeah, I was going to say like stamps, postage stamps.
That's a very typical one. Let's just make this bigger. Say we bought 2 books of stamps. They're about $10 a piece, $20. Let's do 2 more. 2 more things that we're going to buy that may just pop up in an office setting that you didn't really expect.
Once in a while, when there's only like 2 people in our office, we'd, the manager would just buy us lunch once in a while.
Yeah, okay, lunch. And let's say the lunch, it also ran $20. One more thing the office would spend money on.
Employee incentive, $20.
A what?
Employee incentive, like go to Walmart and buy a award or something for an employee.
Okay. An award. We'll call that $25. All right. Now, I go to my petty cash, and I see that the ending balance is $25. When I add all this up, it adds to 70 being spent. However, my ending balance is 25.
Doesn't that have the 80?
Does it? You're right, 80, sorry. And let's make this 15. Now, it's July, so this is July 31. It's the end of the month.
I have a question. If you have $100 in there, you're keeping track of everything.
Mhm.
How can you have less of a balance than?
Yeah, well, that happens. That happens quite often. Somebody takes a little bit of money out to pay something and they just forgot to write it down. That's going to happen, and that's what's happened here. So July 30. Okay, let's do our 2 journal entries now. We have a journal entry on July 1 that we need to start because we need to open up our petty cash, and then we're going to have a journal entry on the 31st to update our petty cash. Okay, July 1. The business got petty cash for $100. So in my T accounts, I come over here and I put in $100 in my petty cash. All I'm doing on July 1 is just moving numbers around. I'm taking money out of my bank. I withdrew some dollars and 5 and 20s. And I simply just put it into the office little drawer. I just moved some money around. Nothing really big happened here. Just taking out of one asset and putting it into a very similar asset. Now note, I don't journalize these exactly when they happen. I don't even know exactly when they happen. They happen during the month. When you have a petty cash, the whole purpose is not to have to go in and journalize and write a check every single payment. Just do it all at once. And that's what we're going to do here. July 31. Well, I bought some supplies, so I'm going to debit my supply account. I bought some postage, so we'll call that shipping expense. And then we would, if we had a whole bunch of these type of situations, we would have a separate expense for each of them. Let's call this meals. Maybe we had to take our client out. Who knows? Meals expense, because you do have that every once in a while. And then an employee award. We're going to add that to that expense. And we're going to simply just go through and list these. $20, $20, 25. Skip a line. Notice I'm crediting my cash. I am not crediting the petty cash. That's a very common mistake, to want to credit your petty cash. When I'm all done at the end of July 31 and I reimburse my petty cash, how much am I going to have in my petty cash? starting August 1?
$100.
$100. Yeah, if I would credit this, that would bring me down to a real low balance, and I'm not. I don't touch that petty cash account. Back to my original rule that I had up on the board here a minute ago. It said, don't only journalize petty cash when you start it, or if you decide that this number needs to be different. You decide, instead of $100, I want this to be $200. We don't have enough. Then we've got to update our petty cash. But simply to replenish it, no petty cash account. Now, I only have 15, so I need to go to the bank and take out $85 and put back in my drawer for next month. Right now, my journal doesn't equal.
Why would you take out 85? That's just something you just estimate.
No, because my ending, when I went in and counted the drawer, it said I only have 15, so I want to get back to 100.
Okay, I get it.
Yeah, good question, because that wasn't maybe as obvious as I wanted it to be. So I started with 100, I had 15 left, and I want to get back to 100. I better put 85 back in to replenish my petty cash. Now, this last debit here is a new expense called cash short. It's actually called cash short and over, but typically it's more short than over. This would be an expense type account, cash short.
Is that a voucher account too?
No, it's a regular, it's an expense if it's cash short. If it happens to be cash over, then it's kind of treated as a kind of like a contra account. But more times than not, lots more times than not, it's usually going to be cash short. Rarely do you have cash over. It's just not as common. So now August 1 comes, I now have $100 in my petty cash, and I'm down another 85 out of my bank because I went and and made a withdrawal.
We only had 500 cash flow.
Because right here,
Only 80 and we had to put.
Oh, okay.
we had 80. Yeah, we had 80 here, and we needed to get to 85. We had 80 in known expenses. This one's kind of, I don't know what happened to it. So you don't ever want this cash short and over to be a big number.
Okay.
That's bad.
Cash short and over, that's an expense.
Yep, expense. Yeah, Joe.
So a lot of companies seem to go to like electronic credit cards. Could that be still classified as petty cash if they're using it in that kind of a manner?
They're using what?
Like a credit card, like if they had a company credit card that was kept on hand, or would it be just a credit expense?
Usually people still have some small bills around. The company credit card.
Because would you expense that out for like what they actually purchased?
Yes.
Or would it just be like?
You would.
So it would still kind of operate as a petty cash, but it just wouldn't be called petty cash.
Yeah, you would. That would be more like a company credit card. If the card was, and you had to pay back, who are you paying back? Visa? Is it through Visa, the company credit card, maybe? Then it would be one of these lunch meal expense, and then I'm crediting my Visa credit card, and then when I pay the Visa, I take it out of the cash because it's kind of a liability at the moment. The cash isn't really out of our hands yet, unless it truly is a debit card.
Sure.
Then yeah, when you're using a debit card, that does come right out, but you don't really have those bills on hand to keep track of like you would in petty cash. Okay. Now, just like petty cash, and then we're going to do some examples, a couple examples. Just like petty cash, it's very, very similar. Could be like account 102, so still above even accounts receivables, is one that's called a change fund. Almost every business is going to have one of these as well. If you have a register, you're going to need to have a change fund account, because you need to be able to make change. We're only going to use the change fund journal, use that in an account twice. Well, two different times that you could possibly use it. Set it up and to maybe change the initial amount. You have $100 in there and you decide it really needs to be more, 200. So I need to update it. This is where this account comes a lot more frequently, is this cash shorten over when you're dealing with a change account. Dealing with a register, there's going to be mistakes made. The register will say you had sales of this much, therefore you should have this much in cash left over, but you really don't. You have $50 and the register says you should have $55. Well, we're going to have to account for that as a cash short. How many of you have or are currently working somewhere where you had a change fund and you had to count the drawer? What was your, somebody tell me, what was your allowed, I don't know what the word I'm looking for is, but your difference, how much were you allowed to be off on your drawer and your manager wouldn't get too mad? $5?
Ours is cheap.
We have to pay ours back.
You do?
Yeah.
You can't be off any?
They'll say I've heard someplace they was going to pay it back for short.
Yeah, that's what he's saying. Where was that? Was that
Pizza Hut.
Pizza Hut? Okay.
Mine's never more than like a dime
Great.
though. It's good.
So now, to somebody, like you said, $5, if your business only brings in $50, $5 is a lot to be off. But if your drawer brings in $2,500, $5 is not that much to possibly be off. So I always ask to see what company's tolerance rate is around. So $5. Anybody have more, like a percentage? We're allowed to be off 1% or.
But I worked at the Apple store for a while, and it wasn't really anything explicit. It was, as long as it's not a lot, it's not consistent, they were fine with what it was.
Okay.
And they determined a lot based on the day's sale, not the average.
So it was more of a percentage, as long as you were maybe a 0.5% or something. Okay. But with the Apple store, I'm going to guess that did people buy stuff with cash?
It was on IU's campus.
Okay.
So there were maybe 10% of the sales were cash.
So not a big number.
But those sales were still fairly high dollar.
Okay. So Pizza Hut, though, they're pretty strict.
Yeah.
The corporation does not mess around. It's funny.
It would be funny though. You would think that if they're going to make you pay it back and you're over, you should be able to take that money home, right?
Yeah, but no, you can.
Down here, what you
If it's
say
over,
back.
the manager gets to take it home.
The manager.
Well, if it's over, that means your customers are going to be upset because they're getting
Short.
shorter, yeah. And you don't want that either. Okay, so we'll do examples to illustrate this. Let's.
Real quick, when you do the petty cash, at the end of the month, do you have to debit or credit any of the petty cash over here once you do the journal entries?
See, I'm still at $100. That's what that That's what I was trying to emphasize here. You
So
only
you never
make a
change
journal entry in 2 different instances.
But on the TCAT, you don't change anything at all?
No, I still have $100. Come August 1, I still have $100. I just took the 85 right out of my bank, put it right into here. And so that day, I mean, my petty cash was constantly going down, but I don't make those individual entries. I just do it at one time when it's time to replenish. So when it's time to replenish, I put the 85 right back into petty cash.
So you don't make a account adjustment then, that there was less money in there?
Nope. Nope. That's what my little sheet's for. I didn't write them out, but I would have had a T account for each one of those expenses that I had as well.
So, when you start the month over, would you just have the petty cash then and not a debit from cash?
When I start the next month, yeah, I don't have that initial entry anymore. I don't. Is that what you're saying? I don't have another $100 on August 1 debit and then credit another 100 because it's already there.
You would just show the petty cash as $100 and go debit to cash?
Yep. So that if I wanted a trial balance at the end of July or August 1, I'm going to show a petty cash balance of $100 because that's what it should be. Okay, very similar with the change fund. Let's say on July 1, I set up a change fund as well. First time ever. I'm just opening up a business and I need to set up a register. And the next day, I start the business. The register says you should have 1,200 in sales. And I go to the drawer and I'm counting the drawer. I have checks that total 750, cash that totals let's say 475. Yeah, that'd be good for a start. I need to journal this. We'll say I'm kind of a mom and pop type store and I just make one journal entry at the end of the day to show my sales and cost of goods sold instead of doing it every single time, which would be kind of hard to do without a computer type system.
Kevin, what is that next to your 1,200 up there?
Sales.
Sales, okay, thank you.
Yep, the register tells me I had 1,200 in sales, so I better have 1,200 cash. Now, take this number back. Let's make it 650. Sorry, 650. Sorry again. Check that. I like it at 750.
Okay.
All right. It's the cash that I wanted to change, not the checks. It's the cash that need to be changed. All right, now it's set. Checks 750, the cash 575. This will work out nice. Checks in a business, we count that the same as cash. Okay. So right now I have $1,275 that I just counted out of my drawer. I need to make the journal entry. What's my debit going to be? Debit of what? What'd I get? Yeah, I got
1325.
1325?
Yes.
Oh, okay. What did I get? Cash?
Yes, cash.
How much cash did I get?
25.
Yes, it does seem like I got $13.25, but I didn't really get $13.25. How much cash?
$575.
How much?
$575.
1270.
1,200.
1225.
$12.25. Why is it $12.25?
Because of the change fund.
Yeah, this is how much was in my drawer, which included
Oh, you guys.
my initial upfront money. I need to take that upfront money out. That's not new cash. I can't count that again. I can't put $100 in and then recount that as new cash coming in again. That doesn't make sense. That'd be like opening up your guitar case as you're playing, looking for tips, and you kind of put some seed money in there to get people to put more money in. And you put $5 in there of bills and coins, and then when you count it all at the end, you have 10. It's not like you got 10 new dollars. You only got 5 new dollars. Why did I get the cash? Yeah, from my sales revenue. How much in sales revenue did I make? $1,200. That's what my register when I rang it up. $1,200. That's what I have to count. Now, we're not even. What do you think I'm going to use?
Cash over.
Cash over. Yes. Right to the manager's hands, right? $25. This is not very typical, obviously. But if we would have been short, it would have been cash short here. This would have only been $11.75. Let's look at the example on number 30. Number 30 starts out like this. That's page 1. We're going to get to that on Wednesday or Thursday and Monday. But this one, the one that says petty cash fund, change fund. Number 30, but it's page 2 of number 30. Looks like this, page 2. Okay, so in this example, we're putting in petty cash into a brand new fund, and then I tell you there's $25 in the drawer at the end of the month, and then I want you to do the 2 journal entries. Record the initial entry and the adjusting entry at the end of the month. And then those are the items that was taken out and written down on our petty cash little sheet in our drawer. Now I want you to be able to go through and do the 2 journal entries, one being on January 1 and this one being on January 31. Brand new petty cash fund. And we had to go down to the bank, take out money out of the checking account. That's where the money came from. That's why we had credit our cash. Yeah.
Will the petty cash fund always come out of your bank account? Could it just come out of the owner's pocket? Like he puts up $100.
Well, that would be kind of a investment then. So if that was the case, you would have credited your capital account as an additional investment into the business. Then the end of the month, simply list all of our expenses that were given to you, and the fourth one here being the drawings, because it was the owner taking money out for his own personal use. And then the problem said we had only 25 left, and I want to get it back to 100. So that means I need to take out 75 out of the cash out of my checking account, thus leaving $5 that I don't know what happened to it. I didn't take a good note, or something cost a little bit more than I wrote down. I wrote down 15 for postage, but maybe it really should have been 20. I just didn't write it down right. Well, I don't know what it was, so I just put it in here in this other account, this cash short. And then go down to the second one there, the change fund. Again, we're opening up a brand new one to practice with that. And of course, every other month after this, we wouldn't adjust the change fund. Counted up the drawer, and we had a total of $26.40 in cash. We need to record the journal entry. No. There we go. So we started out with $100, brand new. Got to put that into my brand new change fund account. It's going to be right next to my cash. How much cash do I need to journalize that I received on that first day of business?
2,540.
Yeah, $25.40. Very good. Because that first $100 was my initial seed money to get it started. So I only received $25.40, not $26.40. I need to remove that first $100 and show I had a cash short, an expense account, to offset my total sales of $2,600. Okay, that'll be a good place to stop.